Naira has been relatively stable for a while, closing at 158.60 to the US dollar yesterday. And for more on what's underpinning this stability and the activity in Nigeria's fixed income market, I'm joined by Bumi Omogore, an analyst at Stanbic IBTC Global Markets. Bumi, thank you very much for joining us. So I think a good place to start will be to try and understand the stability we're seeing in the Naira. Perhaps a little not far-fetched. We've seen a lot of oil majors supplying dollars to the market. We've seen quite a bit of reforms from the central bank in terms of managing the demand and supply dynamics. But at the end of the day, I think many people will still say it's pretty commendable that the Naira has been able to remain as firm as it is, given what is happening with oil production in Nigeria.
Okay. Thank you, Wale. Good morning. The FX market has remained relatively stable. This is basically due to the fact that we have a lot of dollar sales from the oil multinationals, and this actually allowed the dollar. It dropped about 158.25.35, but we actually saw a rebound later in the day based on the fact that there was a bit of demand coming from locals and corporates. This gave it a rebound up to about 158.60 to close at such levels. We expect this to actually continue. We expect dollar sales to continue, but we actually feel that at some point when we would see a depreciation as the dollar liquidity thins out in the system.
All right, now what will be the critical point in your view? Next year, a lot of people talking about the oil price being the key factor. Oil production, of course, has always been an issue in Nigeria over the last 1 year. So what for you will be the critical point? Could it be, for instance, the dollar moving closer to 9.95, or what are you watching for?
Right now, it's a bit too early to say. There are so many factors to put into place, considering the fact that next year is just the year before election. So right now, it's really too early to say a lot. We just believe that maybe dollars will probably be around the 159 levels. It might depreciate further, but it's really still too early to make any firm decisions on what we think.
How much of a factor would you say Sanusi's exit is for the Naira stability going into next year?
Sorry, I didn't get that.
How much of a factor would you place on Sanusi's exit for Naira stability next year?
We know that he has been able to, Naira has been held stable, as in he has always defended the exchange. We believe that this will continue. We don't really see any changes in the immediate term when he leaves.
All right. Well, of course, the big question is who will be taking over, and of course, foreign investors are watching that very closely. Let's move on to the activities in the fixed income market. I'm hearing that there's some moderate selling by foreign investors. Can you just talk us through activity there and the movement in yields?
Okay, in the fixed income market, we saw a bit of sell-offs from the offshore players. This was pretty much just them tidying up and cleaning up their books for year-end, and this led to a bit of rise in yields, about 5 to 8 basis points. We expect this to continue, not as aggressive, but we see that we expect some relative stability going into next week. We don't really see much happening in the market.
All right, and if I were to invest across the curve, giving your expectations for next year, where do you think investors should be placing their bets? Should it be at the shorter end or the longer end?
On the shorter end of the curve.
Is that simply because of the volatility we're expecting going forward?
Yes, we expect a lot of volatility, so I believe that the shorter end is a safer place for them to play than on the longer end of the curve, at least until things become clearer. We know who the new CBN governor will be and all other issues and factors.
All right, so during uncertainty, it's best to stay on the shorter end. Okay, let's talk about the T-bill market. And well, actually, just before that, let's talk a bit about the bond auction. We did see the central bank, the debt management office, issue 75 billion naira worth of bonds this week. Can you just talk us through the uptake for that auction?
Okay, the MO issued 75 billion of the reopening of the 2016 and 2030, stop rates of 12.9 and 13.2 respectively. For the 2016, we believe that was a good level, but for the 2030, that might have been a bit weak. But we saw quite a number of people coming for this auction. We don't expect any auction again this year until next year. We believe that it's just going to be at this current levels for now.
Are we seeing foreign investors invest in these auctions, though? Or is it more of a local investor participation?
More of a local investors' participation.
All right, so the foreign investors are still sticking with T-bills. So let's talk a bit about T-bills and how that is playing out. Can you just talk us through activities recently? I know that the OMO T-bills has also been a factor. We've seen the central bank come to the market to mop up liquidity. We know that foreign investors cannot participate in that, but if we stick with the T-bill market, can you just talk us through the levels we're seeing now? What are yields like in that market?
Okay, currently in the treasury bill market, we've seen buying and selling, more like a balance. We've seen buying and selling of T-bills, primarily from the local players. There was about 159 billion of OMO which matured into the system yesterday. CBN conducted an OMO auction and mopped up about just 27.62. We didn't really see much of the demand of this. They tried to mop up 50 billion, but it was only 27.6 they were able to sell. We've seen a lot of people quiet right now. A lot of people are just closing out their positions. Nothing aggressive, nothing active happening. So the stop rates for this OMO was 11.94 and 12 respectively.
Right. I saw a note that about over 600 billion in maturities are expected this month alone. Can you just talk us through which maturities we are talking about here? Is this more of bonds or is it T-bills?
The 611 billion is actually the OMO maturities, bills, treasury bills that are maturing in the course of the month of December. And this is probably going to lead to CBN conducting more OMO to mop up this liquidity.
That must be a huge challenge for the central bank. And at the latest OMO auction, we saw that they only mopped up about half of what they offered. Only about half of it was sold. So if this trend were to continue, what could this mean for interbank rates?
If this trend continues, we'll probably see a rise in yields, because if they have to mop up at all costs, then yields will probably have to go much higher than the levels that they are to make it attractive for investors to come into the market.